Hello students, I am Rahul Sharad Joshi, Assistant Professor at Department of Commerce, the Bhopal School of Social Sciences. The topic which I have chosen for today is secondary market. We have done with primary market and the basics of capital market. Now today we would be talking about secondary market. Now secondary market is a place where securities of the company are traded after they have been offered to the public in the primary market. So let's recap firstly. In the primary market, what we have learned is the first time when a company wants to raise money, it comes in the primary market to raise the money. Now once people apply for the shares in primary market, once they are allotted the shares, then after a span of time, these shares are listed on NSE and BSE. Then they are traded. Listing of shares on NSE and BSE, and when their trading take place, investor buys and sells on their shares on NSE and BSE. This is known as secondary market. So price of securities keeps on fluctuating and never remains constant. When shares are traded on NSE and BSE, there are many individuals or investors who are buying and at the same time they are selling the shares. So because of the demand and supply equation, the price of the shares keeps on changing and it never remains constant. Now this market is popularly known as stock market. Secondary market is more popularly known as the stock market. In this market, existing securities are purchased and sold. Now what are the components of secondary market? Components of secondary market includes investors, which are buyers and sellers. Then we have members or brokers. Brokers are those who have taken the membership of NSE and BSE. Then we have regulators of stock exchange. We have SEBI, we have Government of India, and then the issuing company. These are the main components of the secondary market. Now coming to the importance of secondary market, what importance secondary market has? Number one, it provides liquidity to investors. Whenever we have purchased the shares from primary market, we get a ready market to sell the shares in secondary market. It promotes economic growth. Then it promotes transfer of securities ownership. People can buy and sell the shares. The people who buy the shares, they get the shares in their demat account, and this is how they get the ownership of those shares. Then safety to investors, NSE is in between. So there is safety to investors, investors' money doesn't go anywhere. It promotes industrialization. Then there is valuation of securities. Securities are properly valued with the help of demand and supply equation. Now what is the difference between primary market and secondary market? When we talk about primary market, it's a marketplace. Companies float fresh issues of securities in general public with an aim to acquire capital to meet the long-term funds needs. In case of secondary market, it gets listed and the shares are traded among the investors. So primary market is the first thing. When the company comes into the market, it issues shares in IPO, and when they are issued in IPO, people subscribe to it, and once they are allotted the shares, then the shares are traded on secondary market. Then primary market is also known as the new issue market. Secondary market is also known as an after issue market. Then type of purchase, primary market is a direct purchase, whereas secondary market is an indirect purchase. Parties involved, company and investors. There are only two parties because it is a direct market. So company directly issues the shares to the public and investor purchases the shares. So in case of parties involved, in case of primary market, there are only two parties, company and investors. When we come to secondary market, there is a trading between investors. Then price level is fixed in case of an IPO, and in case of secondary market, it varies with demand and supply. When we talk about intermediary, there are underwriters, investment bankers in case of primary market, and there are brokers in case of secondary market. Then main objective is collecting of funds in case of primary market, and in case of secondary market, it is providing liquidity. Now we come to stock exchange. The main two stock exchanges of India, the first one is Bombay Stock Exchange. Now when we talk about Bombay Stock Exchange, it is the oldest stock exchange not just in India but in Asia. This was incorporated in the year 1875, and since then it is offering trading instruments like equity, debt, mutual fund, currencies and derivatives. This institution was founded by Mr. Prem Chand and Roy Chand, and it was then called the Natives Share and Stock Broker Association. So earlier the name of BSE was Native Share and Stock Broker Association, and it was founded by Mr. Prem Chand and Roy Chand. Now BSE got its recognition as the premium stock exchange from the central government in the year 1957, and since then it is the benchmark, and it is the first equity index in the country. It is made out of 30 largest and leading companies that are listed under BSE. When we talk about National Stock Exchange, it is the largest stock exchange established in 1992 in India, and since then trading is made only on electronic platform. The National Stock Exchange currently operates in 5 market segments. They are wholesale debt market, second one is the capital market, third one is future and options market, fourth is the retail market, and fifth is currency futures. So these are the 5 market segments in which NSE operates right now. NSE was incorporated in 1992 as a limited company, and it got registered as a stock exchange in the year 1993 and started operations in 1994. The main purpose of establishment of NSE is to provide all the facilities of investor under one single roof. Now, what is the difference between NSE and BSE? NSE, it is the largest stock exchange in India offering completely automated trading setup. In BSE, it is the country's oldest stock exchange that offers high speed trading. NSE was founded in 1992, got recognized in 1993. BSE was founded in 1875 and got recognized in 1957. When we talk about global ranking, NSE is the 11th among the world largest stock exchange, whereas BSE is the 10th one. Index name, BSE's benchmark index is Nifty, whereas NSE benchmark index is Nifty, and we talk about BSE's benchmark index is known as Sensex. Market capitalization is 199 trillion near about in case of NSE. When we talk about BSE, it is 266 trillion, and approximately 1600 companies are listed on NSE and near about 5800 companies are listed on BSE. Now coming next to stock index. Now when we talk about Sensex, the word Sensex is derived from the combination of two words, that is sensitive and index, and it was given by Mr. Deepak Mohani, who was a financial journalist. The Sensex is the benchmark index of Bombay Stock Exchange, and the Sensex is the weighted average of 30 top companies of different sectors which are listed on BSE. So BSE's benchmark index is known as Sensex, and Sensex is the weighted average of 30 stocks. When we talk about Nifty, it is the benchmark index of the National Stock Exchange, and it is also known as the National Stock Exchange Nifty 50. It comprises of 50 companies across various sectors and industries that are listed on NSE. And Nifty is also referred to as CNX Nifty. It represents large cap companies which generally have a good degree of liquidity and are traded in stock exchange. Now, what is the difference between Sensex and Nifty? Sensex is the benchmark index of BSE, Nifty is the benchmark index of NSE. Being introduced in 1986, Sensex, it is the oldest stock index in India, whereas Nifty is little bit new, it was introduced in 1996. Sensex is an amalgamation of the words sensitive and index, whereas Nifty is the amalgamation of the words Nifty and 50. Sensex comprises of top 30 listed companies, whereas Nifty comprises of top 50 listed companies. BSE features companies across 13 sectors, whereas Nifty features companies across 24 different sectors. Now coming to depository, India has two main depositories, one is CDSL and another one is NSDL. CDSL was established in 1999 as one of the depositories for dematerialization of securities. It has more than 7.33 crore, demat holders. Talk about NSDL, that is National Security Depository Limited. It was established in 1996 and presently it has more than 2.92 crores demat accounts. These depositories are functioning with the help of the following other participants. Now, the participants are investors, issuing company, government and depository participants. Following are the three main functions of depository: making securities freely transferable, dematerialization of all the securities in depository form, and keeping the digital record of ownership. These are the functions of both the depositories, whether CDSL or NSDL. In case of depository, one point which I like to make clear is we need to go to depository participant to open a demat account. We cannot directly go to depository. We need to go to depository participants. Now, when we talk about depository participants in today's era, every broker is a depository participant. Every broker is also a depository participant, and we can go to any depository participant for opening a demat account with either with CDSL or NSDL. Now, what is the difference between NSDL and CDSL? As such, there is no such difference between NSDL and CDSL because both are regulated by SEBI and they both provide similar trading and investing services. The only difference lies is in their operating markets. NSDL has National Stock Exchange as the primary operating market, whereas CDSL's primary market is the Bombay Stock Exchange. So, that is all about the basics of capital market and stock market. Thank you so much.